Hi, I'm Mark Steber, Chief Tax Information Officer here at Jackson Hewitt Tax Service. Today, let's talk about all the credits and deductions available to those of us who have children. While kids can certainly be expensive, they also open up a lot of tax benefits that you should be sure to take advantage of come tax time. First, let's discuss how the IRS classifies your children as dependents. The IRS allows a child to be your dependent until they're 19 or until age 24 if they're a student. But there are other rules and other things to know as well. Let's run through my top tips for parents and the credits and deductions you should be sure to watch out for. Becoming a parent opens up a whole new set of credits that you didn't previously qualify for and allows you to get even more money for other credits that you might have previously taken. For example, the Earned Income Tax Credit, or EITC. It's a very well-known and popular credit that almost 30 million taxpayers take advantage of every year. The credit increases for married file joint taxpayers and is even higher with 1, 2, or 3 or more children. This means a credit that could exceed $6,000 for qualifying taxpayers. There's a credit for qualified daycare expenses. If you're a parent who works, you may be eligible for a tax credit of up to $2,100 for money spent on daycare so you can work. There's a child tax credit. The child tax credit is a credit of up to $2,000 per child for individual taxpayers with an income of less than $200,000 or $400,000 for joint filers. This means just about every taxpayer with kids can qualify for this great credit. There's a credit for other dependents. This is a relatively new $500 tax credit available to each dependent of a taxpayer who is not qualified for the child tax credit. Think an older child or niece or nephew or other people living in your home that you're caring for. It's a really great credit and often overlooked. Adoption can also provide tax breaks. You could claim a tax credit of up to $14,300 in qualified adoption expenses. Employer-paid adoption expenses. Your employer could reimburse you up to $14,300 tax-free in qualified expenses for your adoption. And if you adopt a special needs child, you can get the full credit amount for each child adopted regardless of the actual expenses paid in caring for that child. And you can qualify for an even broader range of other credits as well. Finally, when your kids get older and it's time to consider college, higher education, or training, there are both credits and deductions available for higher education expenses, such as the American Opportunity Tax Credit and the Lifetime Learning Tax Credit. There's a tax deduction for tuition and fees. There's an education savings account option that grow tax-free like a 529 account. And there's student loan interest deduction and even more. And these are just some of the most common credits and deductions for having children. Children and taxes can become very complex. And you don't want to miss out, so get help from your local tax pro. Schedule an appointment at jacksonhewitt.com for all your tax planning needs.